Welcome to AI ConvoCast, where we bring you the latest in AI and tech innovation. Quick housekeeping. Check out the affiliate links in our description. Using them supports the show, and please don't forget to rate, review, and share if you like what you hear. Let's jump right in. Today, we will be covering OpenAI closing a massive $122 billion funding round at an $852 billion valuation. China bringing an underwater AI data center online in Shanghai. Micron stock taking a significant hit despite strong AI-driven earnings, and Anthropic quietly tightening session limits on Claude during peak hours. Let us jump right into the biggest news of the day. OpenAI has officially closed a $122 billion funding round, pushing the company's valuation to $852 billion. To put that in perspective, that valuation places OpenAI in the neighborhood of the most valuable publicly traded companies on the planet, and it is not even public yet. The round was co-led by SoftBank and Andreessen Horowitz, with participation from a who's who of major players including Amazon, NVIDIA, Microsoft, TPG, D.E. Shaw, MGX, and T. Rowe Price. About $3 billion of the total came from retail investors through bank distribution channels, which is a notable detail because it signals the kind of broad investor access you typically see in the lead-up to an IPO. On the revenue side, OpenAI disclosed that it is now generating $2 billion in revenue per month. That puts its annualized run rate at roughly $24 billion. The company says it has 900 million weekly active users and more than 50 million subscribers. Business revenue now accounts for 40% of total revenue, up from around 30% last year, which suggests enterprise adoption is accelerating meaningfully. OpenAI also expanded its revolving credit facility to $4.7 billion, though it remains undrawn for now. The company emphasized strong growth in what it called agentic workflows driven by GPT 5.4 and described itself as an AI super app, which signals ambitions to consolidate multiple product categories into a single platform. Industry analysts are reading this round as a clear setup for a widely anticipated 2026 IPO. The structure of the raise, the retail investor component, and the financial disclosures all point toward a company that is actively anchoring public market expectations. Shifting over to infrastructure news, China has brought the first phase of the Shanghai Lingang undersea data center online. This facility sits underwater and uses direct sea air cooling to dramatically reduce energy consumption. It is designed for 24 megawatts of capacity and is powered largely by offshore wind energy. The operators claim it saves 61 million kilowatt-hours annually, which they say is equivalent to the carbon absorption of roughly 1.6 million trees. The announcement was highlighted by China Communications Construction on March 28th and quickly drew international attention. The timing is significant because it arrives right as AI energy demands are surging globally. Training large models and running inference at scale requires enormous amounts of electricity, and cooling all that hardware is one of the biggest operational challenges data center operators face. By putting the facility underwater and tapping into natural sea cooling, this approach sidesteps a huge portion of the traditional energy overhead. It is worth noting that OpenAI itself recently urged U.S. policymakers to expand domestic energy capacity specifically to remain competitive with infrastructure buildouts like this one in China. The race for AI dominance is increasingly becoming a race for power and cooling solutions, and this underwater facility is a creative example of how that competition is playing out. Now over to the markets, where Micron technology has had a rough stretch. The company reported strong earnings driven by AI-related memory demand and actually beat analyst expectations. Despite that, the stock has fallen nearly 30% cumulatively since earnings were reported. On March 30th alone, shares dropped another 9.88%. Part of what spooked investors was Micron's announcement that it is increasing fiscal year 2026 capital expenditures by $5 billion, bringing total planned capex to over $25 billion. That is a massive spending commitment, and even though it is aimed at meeting surging AI demand for high-bandwidth memory, investors appear to be questioning whether the current pace of AI infrastructure spending might be front-loading demand in a way that could lead to a slowdown later. This is one of the first meaningful public market pullbacks in the AI hardware space this year. With companies like NVIDIA and others still trading at elevated valuations, Micron's reaction could signal a broader shift from pure enthusiasm toward more careful scrutiny of how these companies are allocating capital and whether returns will justify the scale of investment. Finally, Anthropic has confirmed that it has been adjusting 5-hour session limits for free, pro, and max-tier users during peak weekday hours, specifically between 5 and 11 a.m. Pacific Time. The weekly limits have not changed, but during those peak windows, token costs effectively deplete sessions faster. Anthropic says approximately 7% of users are affected, mostly pro-tier subscribers. The change is tied in part to the rollout of 1 million token context windows, which naturally increases how quickly tokens get consumed in a session. What drew extra attention here is how the change was communicated. Rather than a formal announcement, the update came through a social media post by one of Anthropic's engineers. Users on Reddit noted the disclosure was notably low-key, buried in a social media post rather than delivered through official channels. Some heavy Claude Max users reported that sessions began draining unusually fast starting around March 23rd, days before any confirmation appeared. Earlier in March, Anthropic had actually run a positive off-peak doubling promotion, giving users extra capacity during slower hours. This latest move in the opposite direction highlights a real tension in the flat-rate subscription model. As users adopt longer context windows and more complex agentic workflows, the cost of serving each session goes up significantly. Balancing that against a fixed monthly price is a challenge every AI provider is grappling with. And Anthropic's adjustment is one of the more visible examples of how that pressure is showing up in practice. Thank you for listening to AI Convo Cast. Please don't forget to rate, review, and share if you like what you hear. Thanks and hope to see you again next time.